The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, we have the Dow down $110, Nasdaq off 43, S&Ps are off 11. And folks, if you haven't test drove the Nadex product, get over to our website at TFNN, hit that banner, bring it up. They'll put $25,000 of funny money into the account. We will walk you through this whole exchange. Darrell does it each and every trading day, 1 to 2 Eastern Standard Time. Darrell Martin, what's going on?
How's it going, man?
It's going great, man. It's a beautiful thing. We got action, man. There's no two ways about it.
The markets woke up, I think, huh?
The markets not only woke up, and we're talking the S&P, folks, okay? Your first leg has been down. I sold the first leg. I had the ones that expired at 10 o'clock this morning, the first ones.
All right, you just got to rub that one in now.
Well, you know, and now it's the patience deal, folks.
Right,
okay,
right.
So
yeah, that was the easy money. Yeah,
that was okay. So what you have now is this, okay. And what I was going after the swing low from yesterday, the 1865. Okay, it went to 1861, so it's a beautiful thing. It closed out at actually 1862 and a quarter, which was fine. I had the 1860s at the low. Now, what should happen here, folks, is this. This is where the patience comes in. Because if you're trading the Nadex product, we're going to be trading it right now. I'm waiting for this bounce. What I want to see, the E-minis are at 1863.50. So watch what happened here. If you're just joining us, folks, okay, I'm on a 10-minute chart. We're going to basically, I'm going to probably go after, I think I'm going to go after the 10 to the 12s, all right? And we'll use Darrell's analyzer to bring this baby up. Oh, it's doing it right now. Come on, baby, come to daddy. So what you have here is we're at 1863.50. We had broken the swing point out here from the 9:50 yesterday, at 10 o'clock yesterday, at 10:65. So watch this. You had 113,000 contracts on that swing point from yesterday. We got underneath that, and that was right at the close at 10 o'clock with 56,000. No, with 56,000. Okay, so there's the bounce. Now, what I would just love, because there's an 1865 that's out there, I think this thing should bounce to 1865.75. And if it bounces up there, so let's go over, Darrell. I want to do those S&Ps. I got to, you know, and it was interesting. Okay, so 10 to 12s. Yeah, at what, 1865, we got to 1855, which is not bad, 10 S&P points. And that would have to be by noon. And I suspect it's going to be by noon, folks, as long as it's up here on lighter volume. You know what was intriguing yesterday, Darrell, right? I sold the NASDAQ and I sold the S&Ps at the open yesterday.
Oh, yeah, yeah.
And
wrote them down, they dropped a deviation, and bam.
Check this out, though. This is kind of interesting. What happened is that so, folks, when you're selling these boxes, right, what you do, I sell as close to the top of the boxes that I can get. And the reason I'm doing it that way specifically is that it brings my dollar risk down dramatically. So it's a patience deal waiting for the top of the box. And then once you have the trade on, I buy back, or try to buy back at the very bottom of the box. What was interesting, they closed me out on the S&Ps yesterday, right? Because, of course, the market got tanked right at the open. But the NASDAQ was interesting. I had like 50, 60, 70 contracts. I forget what it was. It was over 50. But what was interesting is that I had to wait to the 10 o'clock, you know, to close it out. Isn't that wild? So the S&Ps were more liquid. That's...
Oh, yeah.
Yeah, which I thought was unusual. What is happening, folks, is that Nadex has a new liquidity provider, which, in fact, may make a difference in that aspect, if that's... you know, because what I ended up, I was trying to close it out, and the S&P, the NASDAQ, the futures were a good 10 points underneath that. I mean, I got it. That's the bottom line. But it's always nice to get it early, so then you can use that cash and parlay that cash.
So you were trading the U.S. Tech 100 on Nadex.
I did both. Yeah, I did both. And they closed me out on the, you know, and on both of them. At the bottom of the box, as soon as I got it, I put the buys back in at the bottom of the box. I gave the Nasdaq. I was a point over in the Nasdaq, right? And I was only a half a point over in the S&P, over the bottom of the box. They got the S&P. They closed that out, but the Nasdaq, it was actually 10 points underneath that, and they still wouldn't close me out. You know.
Well, what was your size, and how far? Like, what was the?
I had 70 contracts. On the Nasdaq.
So a couple things, because I mean these are some common things that come up.
Yeah.
And not, I mean, just going over things. It's not like a common issues.
Yeah. No. I'm with you. Right.
Yeah. So like going over, if I'm pulling up the tech right here.
Yes.
And I'm looking at say 12 o'clock. Okay?
Right.
A couple things is you got to look at where the say the bid ask is.
Yes.
First.
Right.
It's pretty small. It's only a couple ticks.
Right.
You know, no points there. Which I mean, not that big considering it's $1 tick.
Right.
So if you're like way underneath it, like look at the other side over here. This is somebody just took out the entire book right there. If you're way underneath it, you're gonna have a little lower liquidity. Two, you always want to look at, and this is just something that. It's one of those things. As long as you're okay with it, it's fine. But you gotta, you know you're gonna deal with it like any option market.
Right.
I mean, it really is an option market. It's on the futures, but it's an option market.
Right.
So, you always want to look at sort of like that bid offer size.
Yes.
And that's really, I guess, how can I put this in the?
No, I knew. Yeah, because even when I went in, it took. They took, of course, the 30 contracts immediately. It took a while to get the other 40 contracts, but I got them.
Right. Exactly. Yeah. So basically, you had to go through like 3 rounds of them reloading the book.
Yeah.
And it takes anywhere between 30 seconds and sometimes 3 to 4 minutes.
Okay.
Because they're having to unload. Okay.
Yes.
Any position they do.
Right.
In order for that to happen.
Okay.
And what's funny is it went down, and you're taking profit, right?
Right.
So you sold it all the way down, and remember the other person on the other side, that like the liquidity provider, the other traders, whatever, they don't, especially the liquidity provider, they don't know you're taking profit.
Right.
They just know you're putting in
that
order
someone's
to buy
out
that
there.
contract.
Yeah. Right. Exactly.
And the reason I bring that up is because you go into buy and they're selling.
Right.
Okay, so if you go into buy this contract all the way at the bottom of the box, and they're selling at the bottom of the box, they're basically looking to make like $3.
Yes.
Okay? Where you can make like, 30 or 50
right.
or 100.
I know.
So they don't know if they're taking on risk or getting rid of it.
Yeah, no, I could see that. I could definitely see that.
So they have to know they can get rid of it, have that buyer, have that opposite. They can sell that whatever
and
they're
buying.
And they
couldn't get rid of
it.
Right.
So, I mean, because who's buying things way down there? So it's just, traders sometimes, and I know you 100% know this. I'm just letting our listeners know. Traders sort of assume, like, market makers out to get them. It's like, we want the market maker to be profitable, not to, like, live on us, but we want them to make a little bit. We want them to be, we want them to do a good job at neutraling off, their positions.
Yes.
Because the more effective they are, the more confident they are, the more liquidity they will provide, and they'll be here tomorrow because they're making money.
Exactly.
It's an essential piece.
Yes.
And I've heard so many, gurus out there talk about how the market makers are hunting your stops and it's like, well, one, they're not hunting stops at all.
That's not
how they work.
Right.
They're not trying to like make the bid-ask spread super wide on you just to hose you.
Right.
I mean, they're a trader. They're just a big trader.
Yeah.
And they're not a big trader in the sense of moving the market. They're a big trader in the sense of taking on, they're exposing themselves to the entire, 1,000 contracts at one time.
Well, you know what I was trying to figure out, right? So check this out. This is, so you got to picture this, folks, in the middle of this trade. I was trying to figure out, so picture that, here, we'll set up the scenario. Let me get the NQs up for a second. Because there has to be a way we can make money on this, too. Okay, so picture...
We better.
Right, no. I mean, okay, so on the aspects, so watch this. The NQs right now are 35.47, okay? So I had sold them, it was a nice deal. I think it was 20, maybe it was 40 points higher, okay? So was it a 30-point spread or 40? It might have been a 30-point spread. Okay, so picture this. The closeout would have been, let's say, 35.50, okay? And the NQs would be trading at 35.40. So they're 10 points under the closeout, right? But yet the bid still was a point over 35. It was at 35.51, even though the NQs are at 35.40.
Okay, so what was the... Okay. So basically, give me like what the floor and the ceiling was.
Okay, let's just say the floor was here. Hey, let me pull one. Let me pull one up right now. I'll give you one.
Okay.
I could look at the history actually, but let's see. Okay.
This might be a good one right here.
Yeah, I get to watch this. Oh, here, hold 1 second. Let's do this first. The E-minis, here they come, baby. Okay, 1 second. I love this program, Darrell. Okay, here we go. So we got.
We're going for our bounce here?
1865. Yep. Let me see how many minutes we got into this bar. Okay, you get 6 minutes into this bar. At 36,000 contracts. Now watch the correlation, folks. The first drop down was 84,000. We're at 36,000 right now, but guess what? They're going into 121,000. So this is a sweetie. Okay, so now let's go over to the S&Ps. And so now let's get your analyzer going, Darrell, all right? If I'm going to go...
It's always going.
I know that. Okay, so... Okay, 65. I could get a bigger pop, and I could go to the 70s. Wouldn't that be sweet? Oh, man. So what you have here, folks, okay, one top of the box is 1865, another's 1870. It would be really great to get close to like 1868, and I could get those 70s.
So you're waiting for the pop and drop? Is that what you're going for?
Yeah. This is going to go back down, man. This is not...
No, I agree. Well, I'm actually watching right now. I got my chart up on the S&P.
Yeah.
And, we've been going short, had a short signal all morning here. And actually since yesterday.
Right.
But it's been going down, down, down. We actually just got a reversal bar. So I use price action-based bars versus time-based.
Okay.
And I reference time-based, like 10 minutes for volume.
Yes.
More than that from you. And so going on down. But right now, you know how I talked about, I'm always about expectancies, right?
Right.
And looking at the market right now, what I'm noticing is we got this jump up.
Okay.
But we don't have we're not exceeding volume on it.
Yeah,
so
right.
we're really low.
Yeah.
When I say exceeding, I mean exceeding expectations.
Right.
So we were pushing down actually more than normal this morning.
Okay.
It actually lightened up. Notice how the bar right here?
Yes.
If you look at this bar, you'll actually see that on this last drop, we didn't even come close to meeting expectations.
Right.
That's a real good clue that the market's about to slow down and bounce, which is exactly what you were talking about.
That's right.
Okay. And then we see the very next bar go up, but it actually goes up on much lighter volume.
I just sold the 1870s.
You're already in. You're like, yeah.
I did. I know. Well, we can do another one. I mean, I just wanted to get. I got. What'd you get over here? Let's check out these 1870s. Let's walk through them real quick. Okay, so I just.
Now, did you do the 415s?
Oh, the history.
Well,
no,
that's way out there. That's 7 points away.
No, I did the 12 p.m.
Okay, all right. So
what I'm looking for is this. This is just a short little deal, folks. Okay. What I'm going to look for. I'm expecting you're going to get a failure right here because what we're doing, we're almost at the, let's see. Yeah, I got one more minute in this bar. I'm at 46,000. 46,000 is going into 129,000, man. See ya. I want to be ya. You stay right there, folks. Darrell and I coming right back. Dow's down 96, Nasdaq's up 39, S&Ps are off 8.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, we have the Dow off 98, NASDAQ off 40, S&Ps are off 9, and Amazon, folks, monster ABC down. 75-point ABC down. It's down 29 bucks right now. That 75 bucks, by the way, is off that 337. So 250 is going to be coming at you. It's breaking the B point. The B point's 305.50. It hits 306.60. It only needs 5.3 million shares, and it's already done 6 million shares. So there's going to be some real action there. And as you're over at TFNN, folks, growling and prowling with us, this is the last weekend for the Tiger Dollar sale. And the way the Tiger Dollar sale works, if you get any subscriptions at TFNN, if you want to make 20 to 25% on your money, you buy $500, you get $600. You buy $1,000 and over, you get 25%. So $1,000 we give you $1,250. The way Tiger Dollars work, they're good on all services at TFNN, totally transferable, no expiration date. If you do take part in that promotion, what you are also going to get absolutely free is 5 days, 8 to 9 o'clock in the morning next week. We're going to be growling and prowling, and as we do on this show, we're going to have a lot of fun because 8 to 9 o'clock in the morning, we're going to do the morning routine. It's going to be a webinar as to what has happened in Asia, what's happening in Europe, and, of course, what I suspect is going to happen in our markets. The details are right in the front page of TFNN. Now let's go to Tigress Ilka in Boston. Ilka, what's going on?
Hi, guys. Wow.
I like it. I like it. I can't wait to see you and your husband. We're going to have some fun.
Oh, I can't wait either, Tom. That was so nice of you to. I said to Arthur, I said, oh my gosh, we may. It will be. I'm excited.
Oh yeah, no, we're definitely gonna. We'll go out and have some stone claws or something. If you like stone claws, they're really good down here. Totally.
So hi, Darrell, as well. So okay, wait a second, because I didn't listen to you from the very early because I had a meeting. And what are you doing? You saying, I'm not sure if I understood. You are going to go long, short term on NQs, or let's.
No, I sold them.
Okay.
I sold them.
Oh, you sold them.
Yeah. Well, I see what you're talking about. What happened yesterday, Ilker, is I sold on the Nadex platform. I was talking to Darrell about it. I had sold yesterday morning. I had sold the NQs and I sold the S&Ps. Okay, and I sold them at the top of the box. And as soon as I sell anything, I try to buy them back at the bottom. Well, I just put the order in, just because it's in there. If there's a spike down, you get it. And what had happened is that when the spike did come down right away, they closed me out on the S&Ps, but the NQs didn't close out. And it really has to do with probably I had too many contracts in the NQs versus the S&Ps. The S&Ps, I think.
So wait, Tom. So what did you trade?
Over in the Nadex platform, right? You can sell.
Give me numbers. Yeah, no, I just want to see what you sold. So you sold NQs, and at what price?
Let me pull these up. I sold NQM. I sold actually before the open. I sold the 8 to 10.
Oh,
so I was clean at 10 o'clock in the morning yesterday.
Okay.
And what happens with the reason that the question was there for Darrell is that the NQs had come basically 10 points under the bottom of the box, and I still wasn't closed out. You see what I'm saying?
I see.
And what I was trying to figure out is how I could make money on that, actually. because what had happened, and he explained it, what had happened is that the bid was still a point over, and we were at 10 under. I'm saying to myself, man, there's got to be a way to make money on that.
I see. Well, listen, so I want to talk about my trade with you, my bet with you.
Oh, yeah, what was the bet? That's right.
Oh,
did you win it?
You have to be kidding. I mean, that was such an important bet. How do you not remember? Anyways, so this is so funny. Because but back then, and I want to do another bet with you, but maybe I don't know if you'll go.
So do I owe you a pizza?
No. Listen to this. Okay. Now, you know that, in fact, you would never, ever, I would never, ever trade round numbers, correct? So we had a round number bet.
Okay.
You know by how much I missed my winning?
How much?
By .06.
Oh, my God. Oh, that's wicked.
So you have to be kidding me. So you know I would never make that stop right there. So I'm considering myself a winner because this is not a chance. By .06, so the E-minis, I was like, you have to be kidding me. And then they collapsed, and I said 1800. It missed by .25. So it's like both ends I lost by .06 on E-minis and like .26. You have to be kidding.
No, you stay there. You won. I'm buying dinner or lunch for us, no doubt.
Oh, yeah.
Yeah, totally. We'll have some fun. You stay right there, Elka. We got Elka, Tigers in Boston, Darrell Martin, Tom O'Brien. You stay right there, folks. We're coming right back. Dow's off 100, Nasdaq off 45, S&Ps are off 10.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. I appreciate you growling and proud with us out there. We have Ilka. And, folks, when I was just talking about closing out a position on Nadex, if you do have a live account out there, you'll see, Darrell, if you pull those up, you'll see me. I'm bidding, and this is going to be interesting to see how this shakes out. So that's me out there trying to, and this is under the market right now, folks, but you'll see how this shakes out because I suspect we're going to get a nice little spike on the S&Ps down there. So I have the 12 o'clocks. And
down with volume too. See that volume right there?
Yeah, and see that 18. See that I'm trying to buy 10 at 1860.50. That's a close, but the bid right now is 1862.20. The offer is 1862.70. We'll see though what you're going to see if you are out there live. You'll see as we go down exactly the phenomena we're talking about. Now I expect I'll get closed out on the S&Ps. Which is a beautiful thing because, of course, we just put that trade on, 20 minutes ago, and that's at 12 o'clock.
Yeah, you're going to close it soon.
Well, I have it out there, Ilka, to basically take the profit. Do you know what I'm saying?
I know.
Yeah, because then I can I'll just parlay that bread into another one. So. Yeah.
All right.
So here, tell me again. So do we both miss it by like?
Oh, you have no. I actually looked at it. So basically, our bet was that it's not going to. So my bet was I said that it won't go above 1865.
Okay.
And then it will hit 1800 before that. Okay.
Okay.
It went to 1867.5. so by 2.5 points.
Okay.
And it missed because it went to, right after that, just collapsed. It just touched it because there was a gap. I didn't see the gap. I should have moved that to a little bit higher, but whatever. And it went down to 1803.25. So it's like by 3 points again. Because I said 1800s. Again, I would have never done round, but this was fun. This was fun because it did what I wanted to do in most of the things. That was a good week for me last week. So anyways.
Sweet.
It was fun. But so I have a different bet for you. This is now very challenging, and you probably will say no.
Okay. I gotta get the pen and paper out for you now. Go ahead.
Yeah. Do pen and paper, and what I do markers actually on my chart, so then I remember.
Okay.
Anyway, so because I'm trying to now aim it for May, that's why I'm doing it.
For May, okay.
So I'm giving you, like I said, longer term. My gosh, I'm challenging Tom in a half. So I'm betting you this. And this just changed recently for me because I thought this market will be collapsing, and now I'm seeing something else, and I'm saying, who knows? Maybe something else will happen. So
okay.
That 1890, this is E-minis, okay?
Yeah.
That high of 1892.50.
Yeah.
I'm going to say that this will be hit again before the low of 1803.25.
Wow. You're giving me some good odds here. I like that. So what are we betting? I'll take that bet.
Well, our regular bet.
Okay.
Pizza or lobster?
Okay, perfect. I like that bet.
You do? Okay,
yeah,
good.
Yeah.
Okay, good.
Geez, 1803.25, we might be there Monday.
That's fine. And if that happens, then if this low is broken, then I definitely believe we're going lower. But if this low is not broken, we may go higher one more time in May. Like they may just do this little trick, whatever.
No, listen, we both know the market is deviant beyond belief, folks. There's no two ways about that. There's no doubt.
Although Darrell says that there is nobody looking at your stops, I don't believe that. They are definitely looking at my stops, and they grab them as they want them.
I just said they know how to find them. So.
No, I'm joking, Darrell. I'm joking.
Now, I may be looking at your stops.
Yeah, that's right.
So
anyway,
I don't want you to know that
I'm
looking at your stops. So.
Yeah, I'm still short, by the way, one contract on euro. And
nice.
I went long and out, long and in as well, but I'm playing that game that I believe that high will not be reached. It's a fun thing because that euro drives me crazy as well. But
I agree, man. I can't. It blows my mind that the euro is up at those levels. It really does.
Yeah.
There's no doubt. It's like, what's holding it up? I mean,
Well, it's technical. It's nothing fundamental, definitely. So it's just technical. They need to do one more test, but I don't think that they will go as high as the high of the 139 something 76. I think I have it or.
Yeah, that was the spike high, and that was a spike high of March 13th, right?
So that's where my stop is on that contract.
Yeah, I think I like that trade, particularly.
So you like the trade on the E-minis with me?
Yeah, I do.
Okay.
I mean, I think you gave me a good break here.
Yeah. I'm trying to be fair. I never try to do unfair trades. So there you go.
Oh, I love you. Okay.
So listen. So we have a bet. I'm marking it down on my charts, and I know I do want this market to go down lower. It depends how the volumes will be.
Well, watch right now. I mean, you might get your wish right now because we're breaking here. Let me see this 10.
We're at one deviation level. It's literally pounding it right now, trying to break through.
Yep.
See those deviations, man. I love those deviations. Okay, so So. We're in a new 10-minute bar, and all we have to do right now is get under 1859. That spikes under 1859, and you're going to see something really. In fact, no, it's all right. You get one more spike. Check this out. This could be really intense, folks. 1859. We could get down to 1839 today. Today.
I want it.
Yeah.
If that happens,
I want it too. That'd be a good weekend.
If that happens, I think next week will be a nice buying opportunity.
Buy.
That's because I wanted to go higher than 1892. I need to win.
I think when I went to that school in South Boston, that Gate of Heaven school, I don't think they ever taught me how to spell B-U-Y. No.
I know. Believe me, don't I know that on your name? Your middle name is probably Sal. Yeah.
Oh, well, the kid. I can buy gold.
Short the market, yes. You definitely are much more comfortable shorting it. And you make, when you're right, Tom. I'm telling you. It's like unbelievable.
I have patience. That's
Bears
the name.
go out the window, man.
That's the name of the game. Do you know what I mean?
Yeah. But anyways, okay, good. I'm so happy because I looked at it and I said, what if? I mean, I was really short for a while, thinking that this is it, but then I don't know. Anyways, very good. And Basil Chapman's method is the one that is keeping me believing that maybe, at least my interpretation of it. So it's interesting. We'll see. Yeah.
Okay, well, listen,
right.
I look forward to seeing you and Arthur. We're going to have some fun.
All right, you guys. Thank you so much. You guys are awesome,
Thanks,
really.
Ilka. Have a great one.
Take care, you guys. Bye-bye. Have a wonderful weekend, both of you.
Thank
Bye.
you. So, hey, Darrell.
All right, so your order's sitting out here. You know, I'm pointing my hedge strategy. You know me, I love hedging with this stuff.
Right.
And so I got my S&P E-minis on. I got my hedges on, going long. So one thing to point out, this is just really
this is cool. Now I'm glad with the
So you're going 1860. You got 1860, 1870.
Right. And see, that's me at 1860.50.
I know. I know it's your order. I see your stop.
Right.
But it's really your take profit. But yeah. Anyways, okay. So one thing to look at when you're setting that take profit.
Yeah.
All right. Look over here on the scanner. This will help you out.
Okay.
How has the proximity to underlying? Okay.
Yep.
So we
One
had about,
second. Hold on. 1 second. Let me get this right in front of me. Okay, I got it. I see it.
We got like 10 to 12 is really what's fluctuating, okay?
Right.
And that's Nadex ticks, okay,
right.
which is 0.1.
Yes.
So that's basically a point, maybe a point, basically it's 4 to 5 ticks on S&P, okay?
Yeah.
So when you're setting your take profit,
okay,
you want to keep that in mind.
Okay.
That it's about 4 to 5 ticks off.
Yes.
And you want to look at the bid-ask spread, okay? So which is about 2. So you may have about 6 to 7 ticks off. Like, so if you have a take profit at a certain point, and you want to hit it, like you want to get out of that spread the second it hits that price, then one of the methods is that you can go in there and you can basically say, okay, go ahead and buy back, but set your take profit like 7 ticks above.
Okay, hold it, because I can change this right now. Hey, explain this to me. I got to get this right in my head here for a second. Okay.
Okay, so being an option is going to have optionality. So when you're all the way at the bottom, there's going to be some premium in there, no matter what.
No, for sure. I know that, yeah.
Okay?
Yeah.
And so you're looking at it, basically you're looking at about a solid 8 ticks is what you're looking at. And here's an easy way to see it. Let me show you another way. Look at the indicative index.
Yep.
Look at the ask price.
That's right, 1862.10. Right.
Okay, so see there's basically, 2 points. Right there.
I got it.
Like once you add in bid-ask spread, once you add in the, all that.
Okay.
So let's say you wanted to get out right when it hit 1856.
Yes.
Then just understanding that there's probably going to be about 2 points of premium in there.
Period. Okay.
Okay. You're basically ready right now to exit.
Right.
Now you could hold on, but you're at this point, we're just now at the bottom, and see how there's 2 whole points, and we're at the floor.
I do. I see that. Okay.
Okay?
Okay.
So you basically got 2 points, and now you can hold on to it. It will go down. Okay? That premium will go down as it gets further, basically at this point, out of the money, right?
Right.
Because it gets lower and lower and lower.
Right.
So you have a little bit different spread on than I do, but because I'm hedging and you're going short.
Right.
But right here, if we go in and you sell that right there, so, as it goes further out of the money, out of that spread, you'll get your fill. But it's all about how fast do you want to get your fill.
No, which is really, that's what I really get to wrap my head around, which is really cool what you're explaining. Okay, cool.
So, like right now, it's like 1.8.
Right.
So you're basically waiting for there to be half a point, a premium in there.
Which is unrealistic, yeah.
Right, because we have an hour plus till expiration.
Okay, cool. Okay. Yeah, that's unrealistic unless it was a vicious spike quick, and then they'd probably clean it. Right.
Yeah, if it flew down, you'd have no problem getting filled.
But that's good to know. Okay, I get that.
So, and as, one of the things, part of the way I learned this is I just look at it, I pull up the Nadex platform.
Yes.
And I go in and I just start looking at different, contracts over here.
Right.
And I try to find ones that were out of the money.
Yes.
Really.
No, I'm with you.
The spread was way below.
And to see what it is, exactly. Right.
Yeah, what could I realistically look at? Right here, here's the 1865, 1865.75,
Okay.
And so you can open that up. And okay, so that one, there actually is 0.5.
Yeah.
But now look at this, okay, because this is the price you're going for.
Right.
Okay?
Yeah.
we're 5 points below the market for that price to be there.
Yeah, I got it.
So you don't want to wait for 5 points below your target, probably.
Because what happens, what we're talking here, folks, is that the risk is that the market bounces. You know, because I got the deal right now, period. You know what I mean? It can take the bread. Yeah.
Now, here's the other really important part on this, okay?
Yeah.
And this is something that I literally probably just figured out. Unfortunately, I figured out the past few weeks. I'm trying to always figure out, what's this pattern here?
Okay.
Look at the bid-ask spread. It's 0.6,
yes.
0.5, 0.6, back and forth, okay?
Yes.
When there is no longer, I figured out this sort of how the market maker works, okay? When there basically can't, when the bid-ask spread, the offer, like let's say it's 0.5, you can't have a bid at 0. Okay, you can't have a bid at 1865.
Right.
Does that make sense?
Yeah, no, it does.
Because they're not going to sell for 0
that
profit.
Makes no sense. Yeah, I got it.
So they're going to want at least a few ticks.
Right.
Right?
Yes.
So if I'm looking at, say, 0.5, 0.6, whatever bid-ask spread, it's 2 ticks on the S&P.
Yep.
But if I'm looking at 0.5, 0.6 bid-ask spread, then what's going to happen is as soon as it gets to within like a tick or 2 ticks of that bid gets within 1 or 2 ticks of the bottom, you're going to see that size on your offer side just disappear.
Yeah.
And so you actually are playing 2 risks here. One is you're waiting for the market to drop an additional 5 points before you can take profit.
Right.
Okay? 2 is even if it did, there won't be any liquidity because it's so far out of the money.
Right.
So now as you get closer to expiration, there'll be plenty of liquidity. It won't have to drop as far, as far as like if it's closer. But like we're talking an hour and a half out, have plenty of time to do the trade.
Okay, well, let's shift gears here because I have another 20 contracts that I sold earlier on the 55s. 1 second. So I'm going to put this. I'm going to put this into close too. Okay, 1 second.
So basically, like I guess the number one summary is make sure at a minimum that you maybe add like 3 ticks.
Yep.
To that floor, and then add the bid-ask spread. So if the bid-ask spread is like, say, 5, add 3, so put like 0.8 above the floor, or maybe 1 point above the floor on the S&P. Is like the lowest you'd want to buy back at, like 1866 on an 1865.
1856. So I'm going to put. Okay,
now,
so
now that's your minimum. That's just to cover bid-ask spread and ensure there's liquidity.
Okay, here we go. So 1850. Okay, I got the 11s. I'm going to put that in. So that's going to be 56.50 I just put in on the 11s.
Okay.
On the
and then the
11
one
AMs.
And then you got one other piece. Okay. So if you're trying to take it at a precision point, like you're like when it hits here, I'm on the futures. I'd buy back at this exact price. Okay.
Right.
What I do is I go, what's the difference between the two?
Yes.
What's my basically? I got 1860 by 1862. I'm not saying bid ask. What I'm saying is the indicative index. Okay.
Yes.
Or basically the S&P futures is basically 2 points different than that spread.
Okay, I get it. That's the number that you're always dealing with. Not always dealing with, but that's what we're dealing with right now. Is 2 points.
So right now you're basically dealing with 2 points. Now so you got 2 things. One, if you're taking it before the thing gets to the floor,
yes,
make sure you're paying attention to that. Okay.
Right.
2, if you're you plan on that thing really dropping down on the S&P, at least give yourself a point above the floor.
Right. And so on the ones on the 55s that expired 11, I just gave myself a 1.5 points. That's me out there at 1856.50 right now at 20.
Right. Even though you see it still dropping down, like notice we're still 2 points away. And
yes.
It's getting lower, but you still got about 2 points there.
Okay, you stay right there, folks. We'll stop talking numbers. We're going to take John. When we come back, we're going to be talking gold. We're going to be right back, folks.
There we go.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow off a $140 right now. Nasdaq's down 64. Nasdaq is getting smoked, baby. When we take a look at this, and particularly what you do have, folks, is that the Nasdaq couldn't hold the highs yesterday. Comes south and continues to come south. Amazon, monster ABC down. This is going to be some nice destruction in this marketplace. Amazon, of course, was $408 in March, January 22nd. That baby's running down to $250, so it's pretty intense. Let's go to John in San Jose, California. Hey, John, what's going on?
Hey, Tom. I'm Darrell. Great show on Friday morning.
Thanks for calling. Thanks for holding. Appreciate it.
Yeah, welcome. Tom, I get your the gold report. I give a very good importance to that. So far, you recommended only one stock at this point, right? So I'm wondering, are you waiting for some major pullback, or is it a good time to enter into the junior gold miners? No, it's not.
So the question is, folks, is to get into the GDXJ. That's the Junior Miners Market Vector Index. When you take a look at this, it's up 76 cents today. We had, basically on Wednesday, I like how it, got to that 37.19 with 5 million shares. And then yesterday, this is going into the downdraft that was created from the 24th. I wouldn't be buying this index, period. Inside that right now, it doesn't look to me like it wants to go higher. In fact, all the gold equities right now still are not acting correctly, in the context of higher price. We have the gold contract itself. I like what the gold contract did. The gold contract absolutely rejected lower price yesterday. We're inside the downdraft bar from the 15th, which is good. If we take a look at the XAU and the HUI, those also rejected lower price. But what I expect we're probably going to see right now is this. We rejected lower price, folks, on the 21st. The high of the 21st, if you're in the equity and many of the gold or silver equities, I suspect that high probably is going to get tested again, John. That's how it looks right now.
Okay.
Patience is the name of the game, man. Patience is the name of the game. That's the bottom line. And I'd be real careful inside that index, because what we have right now inside the gold market is big divergence. And all these gold and silver equities are not the same. It's not even close. And I suspect, we're going to see some of these companies go broke. So.
Oh, okay. Tom, actually, in terms of the timeline, right, do you think it will kind of a bottom, the gold equities, equities in another 2 weeks' time? 2-3 weeks' time?
You can't. What I hear of you're grouping them together, and you can't do that. I think some of them have already bottomed. Others are going to they've broken their December lows, and they're not going to come back.
Okay.
Look at the Yamana. Yamana is going to go to $3. It's at 760. It's a mess. And that's a good thing. Well, it's all relative as to what is a good stock. I mean, but Yamana just basically shot itself in the foot. The thing that's amazing is that the bottom line is the market was saying it wants to get down there. It's like they took it over and it went down there. Have a great one. Have a safe one. Darrell, thank you so much, man. Folks, test drive Darrell's Analyzer. It's an amazing piece of software. You stay right there. We got Nico and Paige coming up next. At 12 o'clock, we got our man, Mr. Basil Chapman, Dave White, and we'll be back. Have a great one, folks. Have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.